not just yet. For the last 2 years, we told you to buy on the dips. Nothing has changed, just not yet. In this video, we're going to show you a few indicators to tell us when to continue the buying. What also I want to preach is don't base your decisions on emotions. We have a lot of uncertainties in this market right now. And when those uncertainties are lifted, we will rally. The only caveat is for the last 2 years, we've been in a bull market, and this bull market is getting tired. We are in the ninth inning of a baseball game, the fourth quarter of a football game, and it's getting harder and harder for this market to go up higher. Another caveat is that next year will be a different story, with the market probably going lower and commodities will be the hot sector. I've seen this exact same scenario in 2022. But let's not worry about next year, but let's worry about the next 4 to 5 months. Statistically, September has been a poor month. So for me to add positions in September, I am going to wait for extreme readings on oversold indicators to add to the positions. We are down from a recent high of 6%, and statistics show we could go down another 6%. There has also been a change in the market where other sectors like real estate look strong. Thus saying that, let's jump into the analytics of this market. This is a series of videos called Inside of the Stock Market. We're calling it Not Just Yet because we will do buying, but not just yet. Before we get started, disclaimer. The information provided on our channel is for educational and informational purposes only and is not intended to be a substitute for professional financial advice. Protect your capital by all means. I want to go over a few facts. This is the presidential election cycle, and we are basing usually the fourth year of a presidential cycle. We have the best of the 3-year cycle, with last year being the best, the fourth year being the second best. What we have seen this year is usually there is a lot of volatility in the market. Not that this year will not be up. We could see a 17% drawdown in a volatile year. The key is when the uncertainties of the market is lifted, when we know who will win this election and some of the geopolitical situations hopefully settled, we will see this market run till December, but not just yet. Volatilities and drawdowns will follow this market. We've done this same scenario a few weeks before with success. We've also bought on pullbacks for the last 2 years with success. So nothing has really changed. My political views of Trump or Kamala, it doesn't make a difference. And it won't make a difference in the stock market also. But when we know who's going to win the election, this will make the difference in settling the uncertainties. What am I looking to try to do today? I'm trying to first to have an overall opinion of which way the market is going, short term, intermediate term, and long term, to see the bigger picture out there. And this is usually done by stage analysis and also historical information. I'm also looking for a trading edge, predict the overall market. I'm telling you right now, I am not a buy and hold or always buy on the dips, because in 2022, we were shorting into this market and having huge amounts of cash until 2023. But thus saying that, the buy on the dip scenario has worked very well for the last 2 years, and we feel there's a high probability that nothing will change except this bull market is getting tired. I am basing this off a rule-based system using empirical, theoretical, and psychological information. I encourage you to make your own rule-based strategy. What I'm trying to give is a weight of evidence here in a 3-part process: the overall market, the sectors, and then to the individual security. I have a strategy with probabilities of succeeding and what my following move is. Thus saying that, short term, I am neutral, intermediate term, I am bullish, and long term, right now, I am neutral. In 2023, we were bullish, bullish, and bullish. Markets do not go up forever, and we are cautiously waiting to see what happens in the long term. The long term for us is 6 months to 1 year. My investment strategy is based on data-driven approach to maximize success. I am a consistent weight of evidence, rule-based decision-making, top-down approach. I use analytics, data-driven insights, and technical analysis. I focus on the maximizing the probability of success. The first thing that I want to look at is the stage analysis. We are bullish in the S&P 500 securities with 64% going upwards. Even with this pullback, we are seeing only 36% of the stocks going lower. Now, many of these S&P 500 companies now are fueled by value investing, real estate, and utilities. As we see the NASDAQ, it's kind of like a 50-50 with the bullish side edging out by 51%. So if we're looking right now, if you're trying and throw a dart in the S&P 500 securities, you have a 64% chance of succeeding. Where in the NASDAQ, it's kind of 50-50. Now, for the last 2 years, we've been telling you since January 18th of 2023 to buy into this market and keep buying on the dips. And each time we were rewarded. Even the last dip where it came close to the 200 moving average, we told you the same thing, buy on the dips. And we actually came out with a video on that day to buy on the dips. So nothing has really changed for us. We are expecting the QQQs to go down to a 420 to a 440 range. Since January 18th, we've held on to a long-term position for over 2 years at 62% gain. Not talking what we've been keep doing, buying on the dips, selling on top. But our long-term position is up 62%. And we feel we will have an opportunity to again buy more of the QQQs. Why am I short-term neutral? You can say the market fell 6%. Why don't you buy right now? Historically speaking, September has been a very poor month. Why do I say the fear index is neutral? If you look at on a 50-day moving average, these numbers we've been hovering around. Even though if you would ask an historical person, 2065 and 24.2 at the time of filming tells you to buy. But if you put it on a 50-day moving average, 20 seems kind of normal right now. Also, about 2 weeks ago, closer to the 40 range when we got in was the right opportune time. And we posted a video on that day when the VIX spiked up. So if I'm looking for the highest probability of trading, and I might not get it, or the highest probability of getting in, I want to see this VIX go up higher. Do I think it'll reach 35? Probably not. But if other indicators line up with this indicator, this will start giving me the weight of evidence to buy. But as we speak today, with historically September, a bad month, the election may be looking a slight edge to Kamala, but really a 50-50. If you go to the next indicator, our short-term overbought, oversold, it's very neutral. As to your emotions, it would seem that this is a right time to buy off the recent highs and the all-time highs. But at numbers at 18.68, 15.49, 20.26, and 20.08, I am clearly looking for zero numbers. And usually at the end of a bull market, we have these things that it touches zero, goes up a little bit, touches zero again, and 2 times or 3 times touches zero. And if this number touches zero and the VIX is very high, combined with the other indicators we're giving you, a great opportunity to get in. We go next to our CCI indicator, and we're looking for a minus 200 level to give us a high probability of getting in. So again, this is a very neutral time in the market and a very difficult time to trade this market because it could go either way. We've had a great 2 years. Thus saying that, we're still waiting for the high probability for the short-term trade, the intermediate-term investing, and the long-term 4 months. We go to the next. And again, short-term, medium-term, and long-term and exit swing signals are all telling us neutral signals. What is also very much giving us guidance will be the components of the overbought, oversold. 3 years ago, this worked very well to tell us when we were overbought in the market to short into it. Last year, this worked very well to tell us when we were oversold to get into the market. This year, our components overbought, oversold indicator is giving us very neutral reading. But thus saying that, 2 weeks ago, it gave us an okay reading to get in. So we would like to see these numbers lower for us to jump in. We've been a big component for the last 2 years of the Magnificent Seven, but they're not rocket ships anymore. After 2 years, they're stalling. They're running out of gas, either gas or electricity. Our double AII market sentiment ratio is bearish, even though this indicator has been helping us, but it's usually 3 or 4 months later. But another indicator we're looking at is the put call options. And again, it's very neutral. So to make a decision to go long or to go short here, when so many indicators are neutral, I will wait for an extreme level to jump in. I continue further, the RIDEX ratio, which again has helped us recently with these extreme levels, but we've seen this number go down, touch it once, go up, touch it once. So relying on the one indicator is not feasible. We look at the stock price strength, very neutral. So we are bullish, but not just yet. Let's wait a little bit, or at least I'm waiting a little bit. We have over 100 indicators that I look at, and what I am trying to do is to get a high probability of succeeding. I specifically get those high probabilities 7 times a year, and on those 7 times, I take a big risk, but I feel the probabilities are on my side. Thus saying that, I have the next 6 months lined out. You know the catchphrase, study it, analyze it, adapt it. Peace.